I'm Benjamin Ensor, Director of Research and Strategy at 11FS, and this is Fintech Insider News. This week, we are talking about Chime gets fined by the CFPB for late refunds, Zopa reaches a full year of profitability and £4 billion in deposits in 4 years, and would you join an online community to help you save? Many women in China are using them to great effect. We discuss all of this and much more on today's show.
This episode is brought to you by La Quinta by Wyndham. Your work can take you all over the place, like Texas. You've never been, but it's going to be great because you're staying at La Quinta by Wyndham. Their free Bright Side breakfast will give you energy for the day ahead. And after, you can unwind using their free high-speed Wi-Fi. Tonight, La Quinta. Tomorrow, you shine. Book your stay today at lq.com.
Hello and welcome to episode 855 of Fintech Insider. I'm Benjamin Ensor, Director of Research and Strategy here at 11FS. I'm joined this week on Fintech Insider News by 3 guests who are here to break down the biggest stories from the past week in fintech and financial services with me. First of all, I'm delighted to be joined by my co-host for today, Jamie Campbell, Head of Venture Capital at 11FS. Welcome to the show, Jamie.
Hey, Benjamin.
Please, can you tell our listeners a little bit about you and what you do at 11FS?
So I'm Jamie. I joined 11FS recently to set up a new venture capital division here. As you may or may not know, 11FS has built some amazing technology, Foundry, which we're using to underpin some banking propositions, and we are looking to acquire businesses that help us extend that capability. And we're also looking to back interesting fintech businesses in the UK and Europe as well. So we're a new investor on the scene. And if you have anything that you'd like to show us, you can send a deck to 11fs.com/VC.
Thank you. I'm also delighted to welcome back Sam Maule, a former host of this podcast indeed, now head of business development at Moov. Sam, you're pretty well known, but how's the new role at Moov going? And for the many listeners who've joined us more recently, can you give us a little bit of background on who you are?
I would be happy to. Moov is going great. They let me do fintech memes now on Twitter, which Google would not allow me to do. So frustrating. So it's a lot of fun being back in startup mode. Moov is a Series B company here in the US where we move money. So hence the name, founded by Wade Arnold, who's a OG in the US when it comes to payments. And they didn't tell me Jamie was going to be one of the other co-hosts. So I'll have a talk with the producers after this. Just saying, Jamie.
More on that later.
And I'm also delighted to welcome back another one of my favorite guests on this show, Kate Drew, Director of Research at CCG Catalyst. It's always great to have you back on Fintech Insider, Kate. Most of our listeners do know what you do, but can you give everyone a little bit of an update on how you've been and what your role is?
Sure. Well, I'm doing very well. Thank you so much for having me back. And I lead research at CCG Catalyst, which is a boutique financial services consulting firm in the US. We're really focused on the intersection of banking and fintech. So we work both with bank clients and fintech clients. And I am responsible for managing our research pipeline, both internally on the client side and externally through the publication of our reports.
Thank you. Well, welcome to all 3 of you, and thank you for joining me. All right, let's jump into the news. So our first story this week comes from the UK, and it comes from one of the OG of fintech, which is that Zopa Bank has amassed £4 billion in customer deposits and hit annual profitability. Zopa Bank, in just 4 years since getting its banking license, has reached £4 billion in customer deposits. That's about $5 billion. Zopa's Smart ISA, or individual savings account, alone accrued £1 billion in less than a year, capturing a significant share of the market. The news comes after Zopa announced its first full year of profitability. Zopa Bank swung to a pre-tax profit of £15.8 million for 2023, from a pre-tax loss of 26 million for 2022. Zopa Bank launched in June 2020, although the parent company began operating as far back as 2005. And so this milestone makes Zopa one of the fastest growing digital banks in the UK and one of the fastest to get to an annual profit. To find out more, we spoke to Merv Ferraro, Chief Strategy Officer at Zopa Bank. So let's hear from her now.
As we continue to grow our Smart Saver Hub, hitting the 4 billion milestone in customer savings in less than 4 years is a huge achievement for Zopa. We've seen this growth thanks to the Smart Saver product that we created by rethinking how we save. We've designed a hub that combines ease and value in one place. Instead of presenting our customers a traditional list of different savings products such as fixed term, notice accounts, easy access, we've created a home for savings where customers can open an account fast, bring over the money that they want to save, create different pots depending on how long they want to save for, under what terms, and they get attractive rates regardless. Our latest addition to this hub is our Smart ISA, which we launched in May 2023. We've seen the ISA market become particularly enticing because of the high interest rate environment, which means the personal savings allowance only stretches so far, and consumers want more tax-efficient ways to save. In fact, our Smart ISA attracted over 1 billion in less than a year, capturing a significant part of the growth in the market. Bank of England data shows that UK savers have been moving around 3 billion per month into ISAs for several months now. These achievements reflect our wider growth at Zopa. We've just reported our first year of profitability in 2023, and we now have more than 1.2 million customers. We look forward to continuing our double-digit growth into 2024 as we set our sights on the UK current account market. Like every other product, the Zopa account will provide an unmatched combination of ease and value in one place.
Kate, I'd love to bring you in on this first. Zopa, as you might remember, was one of the very first sort of peer-to-peer lenders, I think similar to sort of Prosper when it first launched back in 2005. Obviously, it's gone through a few strategy pivots since. But do you think this growth makes it sort of one of the more successful sort of fintech pivot stories? Is this impressive, getting to £4 billion in deposits? I mean, we sort of 4 billion, we bandy around big numbers on this podcast, but 4 million is actually quite a bit of money, isn't it? Is this a success?
I mean, obviously that's a big number and it feels like a success, but I think that what stood out to me as maybe more of a pointer to success is the fact that they have achieved profitability and they appear to be demonstrating sustainability. Because I feel like especially in the US and I think globally, like over the last year or so, we've really shifted from a growth mindset in the industry to one that is really centered on profitability. Private capital is a lot tighter. And in order to demonstrate success, you really have to be able to at least show you can, show a path to profitability. So for me, I mean, that's really what stood out to me as what would be, or what should be spotlighted in the story.
Yeah, that profitability point. Jamie, how important do you think the ISAs, the individual savings accounts, were to this success or have been to this success?
Yeah, I was looking at this, and it's interesting because when you compare it to other UK challenger banks, neobanks, who've been profitable in this time frame, a lot of them have relied a lot on SME lending and focused on business. On businesses, so the likes of Oak North, Starling with the business recovery loans, and Alica Bank. Those are the hallmarks of profitable banks in the UK that share a similar story to Zopa, albeit that Zopa was founded in 2005. So to really grow to this level on consumer products is really impressive, and I think it's obviously a great time to be. To be a bank with high interest rates, and this product is quite an interesting and novel approach to savings, and it presents a more customer friendly approach to putting money away, which I think is which just shows how how important getting the customer proposition and execution right on these things.
Sam, what's your take? Do you agree with Kate that achieving profitability is the big deal here?
I think an easy read on this is looking who invested in them, right? So SoftBank is a major investor in Zopa. So I think if you ask SoftBank right now, somebody over in Japan is high-fiving somebody else in Japan because SoftBank has had a rough go of it. If I'm not mistaken, I think they did like a $5.2 billion write-off. Last November, they had like 4 quarters in a row of, losses. So I don't know, Jamie, you're a VC guy now, right? I would consider this a success. I'd be happy.
Yeah, I think so too. I think and Benjamin, you mentioned at the beginning, Zopa is such an interesting business because it has been many things over its life. It was one of the first larger peer-to-peer lenders. One of the first to really break out in that world. And then when regulation came and the rates became less attractive, they were probably the first of that cohort to announce a pivot into regulated banking activity. And yeah, I think if you're a SoftBank, you're probably very pleased with the way that it's with the way that it's turned out. And I think on the point of profitability, I think in the UK we are seeing quite a lot of consolidation in the market for banks, especially medium-sized banks. And for the regulator to have banks that have a focus on self-sufficiency and profitability, it's probably a good sign in this market. If we're having less competition, and with that the potential for poorer customer outcomes, the fact that you may have small and medium-sized banks that are not self-supporting is just a bigger risk on the UK banked community that you want to avoid. So I would say that their investors, yes, probably very happy, but I would also say this is a great story for the UK banking sector from a regulation perspective. From the FCA, they're probably very happy to see a small medium sized bank for consumers to be in this position.
Kate, are you getting the same? You're seeing the same thing in North America? This drive for profitability. I mean, I agree with Jamie that the VC appetite for sort of endless losses is long since gone. But are you seeing the same pressure on sort of US and Canadian fintechs to turn a profit?
Yes, absolutely. And I think that pressure has been accelerating for a while, and we're starting to see. I think of this generally as like a very painful process that the fintech industry is going through in the US and globally to an extent too, that I think will be positive on the other side. I think we will end up with, sort of the strongest and the best of the best on the other side of this. But I think in 2021, especially, there were a lot of companies raising money with business models that were not sustainable. And now they're realizing that they're either going to run out of cash because they can't raise money because they can't demonstrate a path to profitability, or they need to find a way to survive and pivot. So we're seeing a lot of pivots. But like even from like the bigger fintech companies like Block, which owns Cash App, we're seeing like a real emphasis on operational efficiency. Because they know that, and that's a public company, right? But they know that they're not going to be able to achieve the same results and get the same, response from investors on growth that they did before.
Sam, thank you, Kate. Sam, I want to give you the last word on this. Is there an irony here that a fintech that set out in 2015 to kind of disrupt the banking industry with a P2P banking model, so a P2P lending model, had to sort of pivot to the classic banking business model to turn a profit?
No, I don't think it's anything new, right? I mean, Jamie, when were they founded? 2005, 2003,
was
something
it 2005?
Like that? Yeah. So I mean, I think that's that's common actually in business. I mean, what was it? Nintendo started as it was cards, right? They were a card company, like playing cards back in the day. So this concept of when you're old, all you can lean on is trivia. So that's what I go with.
I think Tesla was a battery company.
Yeah, I mean, well, PayPal, right? We can talk about that.
Yeah.
Take your pick. So the idea of smart pivots, I think the idea of longevity, being able to keep that, in market and be smart and look at the trends and pivot well. Zopa's not claiming to be an AI company. Well done.
Yet.
Well done.
Hey, we don't know. I've not seen I didn't see
Next
the
week.
latest investor deck. Yeah, exactly.
Next week on Fintech Insider.
Yeah, Zopa, the AI bank.
Well, congratulations to everyone at Zopa on that achievement. It's great, as Sam says, to see such a successful execution of a pivot. Okay, let's move on to our next story. US digital bank Chime has been fined $3.25 million for delaying refunds. The digital bank will pay a penalty to the US Consumer Financial Protection Bureau for failing to issue timely refunds to customers who closed their accounts. In addition to paying the fine, Chime will also return at least $1.3 million to customers, the regulator said on Tuesday. The CFPB found that thousands of Chime customers had to wait weeks or even months for refunds after closing their accounts with the company, even though Chime's policy promised refunds within 14 days. In a statement, Chime said that most of the delayed refunds were due to a configuration error with a third-party vendor between 2020 and 2021. And this was reported by Reuters, among others. Kate, what do you think's going on here? What's happening?
I think the most important thing about this story is the context around it. It's really important to understand that this is against a backdrop of extreme regulatory scrutiny right now for fintechs and sponsor banks in the US. And I'm sure that your audience, is familiar with how this works in the US, but just to give like a little bit of a primer, Chime is not a bank, right? It's not a bank the way that Zopa is a bank. It is a financial brand that provides banking services, and it partners with sponsor banks in the US. And that model is undergoing extreme scrutiny because the oversight and the relationship between sponsor banks and their partners has caused a lot of problems. And I think that this is tangentially related to that in the sense that, obviously, like, this is a very specific issue that is not, necessarily about oversight or the relationship between Chime and its sponsor banks. But because those relationships and any companies that operate in that space are under such scrutiny, I think that it's just worth pointing out that this is one example in an array of examples of fintechs coming under fire and their partner banks coming under fire as well.
And Kate, just to build on that, I'm glad that you stressed that, they don't have a banking license. They're the front end, right, if you will. And so they partner with Bancorp and Stride. It's interesting that CFPB didn't find Bancorp or Stride whatsoever. This was only with Chime. So, that I was curious. I'm not able to really read anything more into that, right? But the fact that the underlying banks, those sponsor banks, weren't even mentioned, if I'm not mistaken, in the CFPB order on this. So
they weren't, I don't think. I think you're right. But there was one little nugget in the announcement that I thought was really interesting, that essentially it said the Bureau issued an order against Chime Financial Inc., a financial technology company that designed and services consumer banking accounts for two separate FDIC-insured partner banks. And I had never heard really anyone describe the relationship between a partner bank and a fintech that way, as though Chime designed the services for the partner banks. I don't really know entirely what to make of that, but I thought it was very interesting language, because typically, like, in those relationships, the bank is seen as the supplier to the fintech company, who is then supplying their services to end customers.
Yeah, I mean, the verbiage was really interesting, right? I think it was something like Chime was described as a service provider to the bank and directly as a covered person in deposit-taking activities. So, yeah, fascinating.
And I guess if the liability lies on the contracting entity with the consumer, which is the enforceable element of the relationship, then really they are the only ones that can be pursued, which is which I feels maybe unjust in this relationship. Also, is there a worse thing to get fined for than like a refund? You're refunding people and getting fined. It's not even like a normal banking fine where at least you got to make money from the bad thing that you did that you eventually got fined for.
Yeah, I mean, it's funny. Again, there's so much to read into the order. And you're a fintech geek like Kate when you're reading these orders line by line and dig it into them. But it does. I mean, in the order, you can see that Chime, they contract with and they're responsible for a third-party payment processor. So, I mean, they called that out in the order. So the only rationale for, having that and mentioning that third-party payment processor is obviously there was some kind of issue there, right? I mean, we know it was a tech issue. We know that it was discovered. And I mean, in the grand scheme of things, what was this? 3.2 million, I think. Kate, if I got it right, around 4 million.
Yeah, I think so.
3.25.
It's not massive. I mean, it's not. I mean, if you add up the number of fines that come out every year, I won't even mention the top 5 banks. Those numbers are a bit ridiculous. But Kate's right. This is just emblematic of a cycle we're in right now. The number of consent orders that's coming out every week. I mean, it's 2024 has been one heck of a year in fintech, and especially in banking as a service in the US.
Do we know that this is actually connected to banking as a service? So clearly, Chime has been using a third-party vendor for something, and so clearly something's gone wrong here. But as you said, Sam, the underlying banks, the partner banks, weren't even mentioned in the enforcement order, which implies that they wasn't related to them. Is this actually? Do we know that this is connected to the banking as a service model, or is this just a computer error at Chime that Chime hasn't picked up on?
I think the noise that I've heard, it was a configuration error. And as somebody who used to work at TSYS a long time ago, where I can't go to jail anymore, the number of configuration errors that I implemented during my time at TSYS, good Lord, I turned off paper statements for one of the largest banks in the world for 3 months. Come on. Thank God I'm not in jail.
Good config error.
Kate, I want to pick up on this wider banking as a service point, because yes, even from over here, we can see all the enforcement actions against various different banking as a service partnerships. Is this, to some extent, if I play devil's advocate, to some extent a problem of the US regulators making, because by making it so difficult to get a banking license, they discourage fintechs from becoming banks? So in many other countries around the world, fintechs, like Zopa, for example, went out and got a banking license. And sure, it took them a long time, and Revolut's still trying in some markets, but they've gone out and got banking licenses and become banks. Whereas in the States, it's been so difficult that fintechs just embraced, the banking as a service model. Did the regulators kind of make it too hard to come into the fold?
So yes, I do think that there is truth to that statement. I also think that this crackdown is now like gaining such momentum that, to this conversation, even things that are not necessarily about banking as a service are about banking as a service in the fintech and financial services innovation world in the US. And I think in addition to not making it possible or not creating a clear path to becoming a bank for fintech providers, the regulators have also, not provided enough clarity around what these relationships, these banking as a service relationships should look like. So there's a lot of like, you can't do this or you can't do that, or this isn't being done right. But then, and there has been guidance released, and there was just some updated guidance released, but like there really is not a very clear structure in place for how to do this. And I think that's why, we were talking about like reading into things and like what to make of this. And like, really, no one should have to do that. It should be clear, how to operate. And, I've talked to a lot of banking as a service providers and a lot of sponsor banks and a lot of fintechs, and they all say, we want to be in compliance. It's just really hard to figure out what the regulators want us to do or how they want us to go about this.
Hey, Kate, I'm curious on your opinion on this, especially for the audience outside the U.S. If you didn't know, we're in a presidential election cycle year. Those are so much fun. Let me tell you, if you really want to see some great ads, come to America right now. But we're going to have an election in November, and I'm curious how much of this movement by the CFPB, the OCC, and others is with that in mind, because we could see, depending upon election results, somewhat of a shift in thinking within those organizations. I mean, for example, a huge story here in the U.S. where NDAs pretty much just got, or not NDAs, non-competes pretty much just got slapped around, of all things, and if you're in big tech, trust me, that's a big deal. And so just the sheer number of enforcement actions we've seen, Kate, and the activity going on, it almost feels like, when the ship's leaving the harbor, November 6th will hit. So it'll be interesting to see how this plays out.
Yeah, I mean, I definitely think there are other forces at play. That's probably one of them. I think another one is probably a reaction to SVB last year, or like an overreaction or an overcorrection by the regulators in response to that, where they're just now, really cracking down. And it's interesting because, again, like that didn't even have anything to do with banking as a service either.
Had nothing to do with banking as a service. No, I agree. I think it's a contributor. This is one of the factors, and it's going to be interesting to see how the rest of this year plays out.
Yeah.
One last super quick question just to wrap up this story. Kate, 30 seconds. How much damage will this do to Chime? Do consumers care? Is this a flash in the pan? Or could this actually harm Chime's brand?
No, I think Chime will be fine. I don't think that most people pay attention to these things the way that we do or dig it. I don't think that, potential Chime users are reading these enforcement actions. So I think Chime will be fine.
Yeah, if you think about the other fines for the more significant fines for much, much worse, they have a lifespan of about 3 hours in a news cycle, and then no one really thinks about them ever again. So I think Chime will be probably fine.
Yeah, 100%. You think about the Target hacks, you think about Home Depot hacks. No one cares. They're still in there shopping like crazy. Chime will be fine.
We care, but no one else cares. Okay. On that note, we will take a quick pause here and be back very shortly. Welcome back. Before we get back into the second half of the news, please check out our most recent Fintech Insider Insight show. Nadine Timmer-Bodenstein, Ventures Product Lead at 11FS, is looking into how financial services can provide meaningful value to high net worth individuals. As wealth management becomes more competitive, we look at the challenges of providing products and services to the very wealthy, and how the emergence of mass market platforms and the growth of wealth tech is shaping the market for high net worth individuals in the future. She is joined by a panel of experts from Stratify, Insignis Cash, and St. James Place to discuss all of this and more. Take a look in our podcast feed. It's the one just below this. So let's move on to our next story, which is that iwoca secures £270 million from Citi and Barclays, taking its total investment past £1 billion. So since its launch in 2012, iwoca, originally Internet Working Capital, has provided £3 billion in loans to small businesses in need of working capital in the UK and Germany. The company has already broken its record for the volume of loans issued in the first quarter of this year, with over £200 million lent across 9,000 business loans in the UK and Germany. iwoca's increased funding comes as data shows more high street banks are reducing their funding to small and medium-sized businesses. iwoca's latest SME Expert Index finds that 76% of brokers report that high street banks are reducing their appetite for funding SMEs, while 86% expect demand for finance to increase over the next 6 months. To tell us more, we heard from Mark Di Toro, PR and Communications Director at iwoca.
The news comes at a crucial time with traditional banks reducing support for small businesses. But don't just take my word for it. The data is clear. iwoca's Latest SME Expert Index finds that high street banks are reducing their appetite for SME funding. The British Business Bank's latest report on small business finance also finds that lending from challenger banks and lenders, such as iwoca, has reached a record high, now accounting for almost 60% of the market. The tide has turned. In that time, iwoca continues to break records. The SME finance landscape is changing, and iwoca is leading the way. Our technology-driven approach enables us to provide faster lending decisions, often within 24 hours, and offer more flexible terms compared to traditional banks. In the first quarter of this year alone, we distributed over 200 million across more than 9,000 business loans in the UK and Germany, another record. iwoca has now lent over 3 billion in loans to SMEs since 2012. So now, with the renewed support of our investors, we can focus on our ongoing goal of helping 1 million small businesses thrive.
Jamie, I'm going to come to you first. I mean, this is another one of the sort of old guard British fintechs, been around for a long time. So they've raised $1 billion in funding since 2012. Should a business that's been around this long still sort of need funding? Shouldn't they be able to sort of be sustainable?
Well, I think that the nature of this business and the type of funding that it's getting, it's predominantly debt funding. They're doing a lot of lending. It just shows that they're still growing their lending book. And interestingly, looking more into the details of the type of lending that iwoca is doing versus some of the other SME lenders. We mentioned some earlier in the podcast. Yeah, so I think when you compare it to the different banks, here in the UK, your Oak North and Alec is the ones that we've mentioned, who are serving the SME market in particular. The deal sizes that they're looking at are a lot smaller. They're starting at £1,000, up to 100,000. Whereas these other players are looking at much larger tickets. And again, a UK lender that is also kind of lending in Germany, there aren't many UK lending businesses that have made that step into Europe. There are plenty that's kind of come the other way. So it just kind of shows that the business that they have is working well, and signing these deals with these larger banks, it's not straightforward by any means.
Kate, we continually have these stories about how small businesses are finding it difficult to get funding from established banks. Why is it that established banks find it so difficult to lend to small businesses? What do you think the barriers are that are preventing more banks from lending to entrepreneurs?
I think, well, a couple of things. I think one is it's probably at the heart of it is data and the way that they're using data and their ability to really assess applicants the same way that fintechs or technology providers or more progressive providers can do so. But I'm not sure. I mean, the pullback that seems to be happening in the UK around small business lending seems, pretty intense. And I'm not sure if we're seeing that pullback, and I'd be interested in Sam's perspective on this, but that pullback as intensely in the US. I mean, there are many community banks that focus on businesses in their communities. JP Morgan has started actively marketing commercial banking services to startups. And then there's like the whole fintech side. You have Square, you have Mercury, which serves the startup community. So I don't know. I mean, there's still a lot of work to be done there for sure. But I think we might have, a slightly different approach to it in the US.
Yeah, I agree with Kate. If you're in the tech space or fintech space and all that, obviously, like Mercury is they're a great company. Give them a shout out because they deserve it. And we got other companies like Capitus and Bluevine and Lendio and Live Oak. Take your pick over here. But when you come to SMEs, you get outside the big cities. I mean, I believe the majority of the loans are coming through small community banks. I mean, that's just a reality here. And by the way, we have a lot of small community banks. It's looking like 4,300. I even talked about credit unions. US is really weird when it comes to banking. We love to have a lot of banks and credit unions. Still close to like 10,000 of them floating around.
Speaking of weird banking markets, Germany, Jamie, it's interesting because Germany is similar to the States in that there's lots and lots of little Sparkassen and so on.
Yeah.
Do you think that's why iwoca's gone to Germany?
Yeah, I think so. I think it's arguably it's a market that's well served. But I think it's an interesting landing pad for them. Clearly they've got they've got success. The fact that they've done 200 million of lending, across 9,000 businesses in the first quarter of this year. What is that? An average ticket of, what was that, 22,000 pounds, euros? They're clearly found a nice sweet spot for the scale of businesses that they're serving. And it's nice to see a UK export to Europe for a change.
Indeed. So Kate, we've been sort of focusing on iwoca and what they're doing, and then I was asking about sort of banks and why they were having trouble. But actually, should we be thinking about Citi and Barclays in this story and saying, hey, well, actually, this is quite an interesting move by them? Is this actually Citi and Barclays looking at this and saying, we don't have the data, to your point, we don't have some of the insights. This is a good way for us to channel funding to smaller businesses that we probably can't do ourselves, or enables us to reach some businesses we couldn't otherwise reach. Should we be looking at it that way, that this is actually a smart move by Citi and Barclays?
I will say, if that is their strategy here, I think it's brilliant, because it, like, to your point, it allows them to access a segment of the market that could be quite profitable to serve if you can do it in the right way, right? It's a segment of the market that's like seen as not profitable to serve, which is why it's not well served. But that's really a data problem. So if you can find someone else to solve the data problem for you, why not, right?
Yeah, absolutely. I totally agree. I think, having gone through the debt funding journey, myself, and the conversations that you have with these banks, they're really looking for large credit markets that they themselves don't have the expertise in, or rather can't originate at a volume that makes business sense to them. So where they see a company like iwoca, who clearly has the ability to source data and underwrite effectively these smaller businesses that, quite frankly, don't just fit in a cookie cutter mold of what these banks are looking for, and so would likely just be declined at source. They see obviously the opportunity to extend their credit reach into these areas by partnering with this business.
Well, congratulations to the team at iwoca, and we wish them every success, because, as we've all said, this is a much needed area of the economy that really needs financing, that continues, 20 years after fintech started, still needs funding. So best of luck to the team there, and let's hope to hear more of their success as we go forward. Okay, let's move on to our final big story, which is that Ant International is expanding into Saudi Arabia. So global commerce and digital payment company Ant International is set for expansion across Saudi Arabia after signing a memorandum of understanding with the Ministry of Investment of Saudi Arabia, or MISA. Ant International will use Saudi Arabia as a gateway into the Middle East to further expand the reach of its services. It intends to roll out its payment and financial services throughout the country and the rest of the Middle East region to provide greater access to digital payment solutions for businesses right across the Middle East and North Africa. Jamie, maybe I should come to you first. Is this kind of an endorsement of Saudi Arabia's sort of growing place in fintech, that China's biggest fintech company is branching out to become part of the ecosystem?
Yeah, I think it's also a recognition of the tourism of the Chinese population. I think Ant and Alipay, I guess more specifically, which I have more experience with and more familiar with, and know more people who've worked there and do work there. Their strategy really is underpinned by where do our customers go, and how do we create the same commerce experiences in those locations. In the UK, we see it, all over the the shopping districts, certainly in London and in major cities. But I think, what this represents is an incredibly exciting company who has a scary ability to execute at scale, and who have dominated a market and have the potential to dominate this emerging market. It's a really interesting story, and I think anyone who is looking at payments in the Middle East, this will probably be ringing alarm bells in departments, in banks and other payments firms around the world, because if you move too slowly on this, you potentially get left out.
Sam, we were talking earlier about regulatory crackdowns in the US context, but of course, Ant Financial was itself subject of an apparent regulatory crackdown, and Jack Ma was pushed aside, I suppose. I'm not sure how to express that nicely. Is this a sign that maybe Ant International and Alipay is back? Because the company's been quieter, certainly the last few years.
Yeah, I agree with Jamie. I think they're a beast. They're an absolute beast. And what I like about it is the success they've had outside of China. Way back in the day, before Jamie was born, when I first got in the industry, Japan was the beast. Just saying. I love you, Jamie. But when I first got into banking, you're talking in the early 90s, and Japan was a powerhouse. But one of the issues that Japan faced was this Galapagos Island effect, right? Where their solutions, whether it came to mobile, when it came to banking, and everything else, worked in Japan but didn't work outside. You got outside the country and they didn't have that success. You got to give Ant, Alipay and these others so much credit for being very successful outside of the China market. And I agree with Jamie. I wouldn't want to have to compete against them. I would agree with you. I think there's some very nervous folks, who are now deciding they're going to be an AI company. Register.ai.
And good for Saudi. And on that, it's good for Saudi because, Ant's model, I'm pretty sure I'm correct in saying that, the Chinese population, they like to travel where there are familiar financial services, where the ease of doing business, and the luxury market, the luxury tourism, all of those things kind of play into this, the reason why this move is, not just a smart move, but also, one to really take notice of, because it has the potential to spur on a lot of commerce in the area, and because it's a relatively, not undeveloped, but it's an emerging digital payments market. They really have the opportunity to lock down what the common infrastructure around payments could be when they move to a more digital first approach.
It also coincides with other moves that Saudi Arabia has been making really to court Chinese tourists, right? Like allowing them to apply for visas on arrival and increasing flights between the two countries. So I think this probably plays into like a broader strategy to cater to that demographic and to make sure that, Saudi Arabia continues to be an attractive place for those tourists.
But do we think this is just about Chinese tourists, right? Because when you were talking earlier, Jamie, things saying, hey, Chinese people like to have familiar payment systems in countries that they travel to. Well, American Express, Visa, MasterCard, whatever. That's just normal. Do we think this is just about catering to Chinese tourists, or is it actually about gradually, potentially establishing Alipay as a domestic payment system of enabling businesses in Saudi Arabia to pay maybe businesses in other countries in the Middle East and North Africa? Is this just a Saudi Arabia play?
No, I think it has to feature, as you say, more as a land and expand strategy around, set up and create the infrastructure and create a domestic payments infrastructure around the Middle East. Why wouldn't they have the ability to do it? I think is what's, we know that they've executed in these kinds of ways before, where they just become the norm, and they have such an amazing infrastructure that can underpin it. Whether it's in e-commerce, whether it's in like peer to peer, or whether it's in point of sale, whatever, they can do it well and do it at a huge scale. So I think all of the above is available to them if they can pull it together.
Where do we think Ant Financial might be sort of looking at moving to next? I mean, Sam, you were talking about the American election. I understand Donald Trump's a big fan of Chinese companies.
Massive.
Where do you think Ant Financial might go next?
China. Definitely Latin America. I mean, they've already, the Chinese influence in Latin America and South America is pretty well known. I think, interest in those markets is going to continue to grow, and it just makes sense. It makes all the sense in the world. It'll be very interesting from a U.S. perspective to see, politically how that's received. So we'll see. But my bet would be South America, Latin America, definitely going to be some movement there.
Do we know how many users Alipay has? I'm just very curious. What is the fintech company with the most users in the world? Is it Alipay?
Can the producers pull us a stat very quick?
That's
655 million active users, we're being told.
So that pretty much
they probably
bigger than
win.
Nubank.
Bigger than Nubank.
Yeah.
It's as I continually explain to my son, you got maybe 325 million people in the US, Kate?
Yeah.
And so we're a 10th of what China is, and don't even look at India, right? So, there you go.
Yeah, India. I guess India would be another market to
UPI. Yeah, you could argue
Yeah.
UPI. There you go.
Well, UPI is a standard rather than a company, isn't it? But yeah, you're probably right. UPI is probably the most used,
That'd be
possibly the
massive.
most used system. Yeah.
Yeah.
Okie dokie. Well, let's move on and have a very quick look at a couple of other stories that we don't have time to cover in full. Jamie, do you want to get us started?
Sure thing. Banco Sabadell rejects a takeover bid by BBVA. This is the story that the Spain-based lender Banco Sabadell rejected a 12 billion euro takeover bid from its larger rival BBVA, saying the proposed deal significantly undervalued its standalone growth prospects. BBVA last week unveiled a surprise offer to Banco Sabadell, saying the combination of the two Spanish lenders would create one of Europe's largest and most robust financial entities. It's an interesting one, this, because, in Spain, there's four major banks: Sabadell, BBVA, CaixaBank? Is that how you pronounce it? And Banco Sabadell.
CaixaBank.
CaixaBank. There you go. Thank you. You're good on the pronunciations today. Would a merger of this level work? Would it even get approved? It's an interesting one, thinking about it from just from a competition perspective, how big this thing will be. But they are desperate to make it happen because this is the second attempt to buy the bank in less than 4 years.
I'm a big fan of BBVA. I've had the privilege of working with several of the Spanish banks over the years, and there's some very, very smart people inside BBVA. So if I was Sabadell, I'd be thinking, they're not fools, these guys. But mergers are obviously complicated. Okay. Our other quick story is that JP Morgan has tapped Visa Direct for faster payments. So JP Morgan is promising faster domestic payments in the United States through the Visa Direct network. JP Morgan Payments says Visa Direct will empower merchants, businesses, and fintechs to embed faster domestic payments into their offerings. This will include the push-to-card payment rail, which enables the movement of funds directly to recipients' bank accounts and digital accounts using the debit card credential. This follows last week's news that Visa has launched open banking in the US through Tink. So yes, very interesting. JP Morgan moving fast. JP Morgan was obviously a big payments player. It's not always sort of obvious from the outside because it's sort of got various bits of payments infrastructure that have different labels on different brands and so on. But JP Morgan is, of course, a huge money mover. And this is a smart move. Anything that makes it easier and faster for businesses to move money, to get payments, to get cash into their accounts is huge. And so moving money faster is a big step. So good luck to JP Morgan with that. I'm sure that will be embraced by a number of their customers. And finally, let's have a look at something different from the world of finance, which is that according to BBC News, Chinese women are teaming up with strangers to save money. Dazi is an online trend of finding partners with similar interests online, and a growing number of women are finding savings partners to encourage each other into better spending and savings habits. The hashtag SavingDazi has attracted 1.7 million views on China's version of Instagram, while on Weibo, topics about so-called savings partners have been viewed millions of times. In these online communities, most members are women aged between 20 and 40. Every day, they log their budget and expenses. They also help to stop each other from making impulse purchases. Some women have even opted for a more traditional saving method of keeping cash at home, which is unusual in China because it's gone largely cashless, with many people using apps like Alipay and WeChat Pay. China already has one of the world's highest savings rates, with 2023 having an almost 14% increase in savings from a year earlier. So what do we think of this? Sam, maybe I'll come to you first. Does it make sense to have a sort of partner to keep you on track in your savings? Does Mrs. Maule keep track of your finances?
100%. Mrs. Maule keeps track of everything. I am so screwed if anything happens to her because I have like no clue of anything of my finances. But I am going to start looking for envelopes of money. That motivates me. I am beyond baffled by this. I'm going to be honest. I got nothing. This is so foreign of a concept to me. I'm laughing because I'm like, what commentary do I give? I got nothing. Kate?
I feel the same
nothing.
way. I think because like we're just reading this like from an American perspective, like it would just never work here because people do not talk about money. Like there's no way that you would share your budget with a stranger. It's just it's a completely foreign concept to me. And I struggled to come up with anything insightful to say as well.
You just said something funny though, right? Which is Venmo in the social feed. Still to this day, I'm like, what the hell?
Mine is private.
What the hell? I don't get it.
I don't
So
know
is mine.
anyone who doesn't have it on private.
Some kid who was dealing drugs in New Jersey. That was the kid who used it. Remember that? Send me the emoji. Yeah, that guy.
The bringing it back, taking it away from drugs and Venmo. The community banking, not in the community banking in the sense in the States, but the saving as a group or contributing as a group of people for your finances. It's not too uncommon in a lot of developing financial services places. There are systems like Partner, which is kind of a savings community. So you'd have a family or a kind of a village maybe where you would all contribute a certain amount every month, and every month someone essentially gets the pot of money, allowing for like big windfalls for individual families or whoever makes up this kind of savings community to benefit from. So really I see that as a and there are companies in the UK like Bloom, which is a fintech business which is trying to digitize that experience where you can kind of create a community of people who can kind of save together. This kind of feels like an extension of that, where you're almost having a PT or a personal trainer who's kind of coaching you around. Maybe you shouldn't be doing that, or maybe you should be like, and I think that could be quite useful. I know there are some people that would benefit from that. They probably include me. And I almost see it as an extension of that type of mentality, where actually doing things together can make the prospect of changing your behaviors less daunting.
Yeah, the challenge you have in the US is, one, we don't talk about money. Two, good luck on that community thing. And then three, we don't like saving money. I think our savings rate is down to like 3.6% for household savings. So again, Kate and I, we just don't relate. I'm sorry, everybody. Good on you.
I mean, I'm kind of with you, Jamie, in that lots of people do have, particularly areas like fitness. People go running together. People have a spotter when they're in the gym to sort of look after them. People encourage each other. or, giving up, if you're giving up smoking or you're trying to reduce your alcohol intake, people do have buddies for lots of other areas of their lives. But maybe you're right, Sam. Maybe we Westerners are too hung up about money to sort of talk to each other about, actually, I need to change my lifestyle, because maybe we don't want to admit to each other that actually we're spending way beyond our means or whatever it might be.
Yeah, I like the idea of a sponsor for your money.
Kate?
Or, in those communities or in those, use cases that you just mentioned, like, to what extent do you know the people? It sounds like those sort of like community-based savings groups are built around like an actual community. I think what really struck me about this story was that you're connecting with strangers.
Mm.
Yeah, and sometimes it's like almost like a counselor or a therapist. Sometimes a stranger is better when it's dealing with your money, because if it's a friend, maybe they will judge you on how much Deliveroo you're eating, or DoorDash, I guess, is the equivalent in the States. And if it's someone that you don't know, then maybe they can give more honest feedback, and maybe they can you're more compelled to be more open, because you know that they're not gonna judge you, and it's not gonna come back on you when you're buying a round at the pub next time.
Well, that tip is going to wrap up this week's Fintech Insider News. Thank you so much to my three fantastic guests today. Where can people find out a bit more about you? Kate, where can people find out a little bit more about you?
You can find me on LinkedIn at Kate Drew, or on Twitter at CamDrew, and you can find all of our research at CCG on CCG Catalyst.
Sam?
Definitely LinkedIn. Connect with me there. Always on Twitter, and then in my retro 11FS t-shirt shop on eBay, which I will soon be posting.
They're all sold out.
And Jamie?
Yeah, you can find me on LinkedIn as well. Just Jamie Campbell, 11FS.
And as for me, Benjamin Ensor, I'm also on LinkedIn, and you can find out more about the work that the teams here are doing at 11fs.com. So thank you all so much for listening. Please do follow the podcast if you don't already. Please leave us a review. Let us know what you'd like to hear about in the show in the future. If you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider, or you can even email us at podcast@11fs.com. Thank you all so much, and goodbye.